Testing, testing, testing. JB here. Looks like it's working better than yesterday morning. Hope everyone's doing outstanding. April 21st, 2022. We have about 14 minutes to the open. To be really quick here. Funny, I just saw that little news come across. Melvin Capital Management to shrink by billions in bid to boost performance. So how does that make sense? It just means to mitigate huge losses. If you're if Melvin Capital is doing well, why would you shrink the amount of capital? That's just mind boggling. Anyway, so just gonna talk really quick. Tesla. I'll talk about Avis, Roku, Intuitive Surgical, IBM. I forgot to put on the list Pool. Pool's gapping up on earnings. Just a huge smash, a huge beat and raise. I started looking at the calls on Monday. I think it was 410. They had an upgrade. Had earnings yesterday. The calls are kind of expensive on risk reward basis, only monthly strikes, and I think the 470s were over a dollar or so on Monday. So I kind of passed, and sure enough, it's probably going to go into the 470s next week. If there's any kind of premium crush at the open, I'll look to get some maybe 480, 490 May calls on Pool for a potential move into the 500s. It's just a great story. I talked about Pool a couple times already. As their installed pool base, as they continue to install pools, their maintenance part of the huge part of their business is the maintenance part. So once you install that pool, you probably have a maintenance contract, and that's where the big money comes. And of course, COVID accelerated a lot of that. People trying to make their homes vacation homes instead of having to go away. You have the pool in the backyard, but now you have all those pools that are out there that need to be maintained, and people don't want to do it or don't know how to do it. So that's where the big money comes in. So see how it plays out at the open. If I can find some strikes, definitely will. That's number one. Number two, look at Tesla. It's crazy. I mean, if you looked at a quarter that was just a monster quarter, this is it. Huge speed on EPS revenues. Some great narratives going forward, despite what's going on with the supply chain and logistics and all the chip short, all the stuff that's going on with everybody else. It seems that Tesla just going on and destroying things in the face of all of that. And talking about a 40% increase year over year in terms of deliveries, with a possibility of 60% year over year. The gigafactories are online, so just a crazy story, and you still have people that are doubting it. And I get it. It's always good. It's a market, so you need to have buyers and sellers. So there's always got to be someone on the other side of trade. So we'll have to see how that all plays out. But it's up here at 1070. Maybe it goes to 1200 today. So not that I've traded Tesla in quite some years because the premiums are expensive, but maybe there's an opportunity here to play on the call side. So I'll be watching. If I can find some strikes, I may actually nibble on Tesla for the first time in quite some time. I talked about ticker CAR, Avis, car rental company. I mean, it's not a sexy story, but back in, was it November of last year? I have to go look at the chart. Huge short squeeze on their earnings. I think it went from 200 to 500. You have to think there's a lot of people caught short still. Right now it's 11% short interest. Back then I think it was 20%. Company has $1 billion share buyback authorization. The company is back to profitability, huge profits, huge EPS. I think their EPS is like 800% year over year estimates for their next earnings, year over year growth for their next earnings. So I'm not going to sit here and say it's a $400 stock or $500 stock. I just think there might be an opportunity to play it for a squeeze. You saw what happened yesterday, up 10% on a Barclays upgrade, and the upgrade, they took their price target to 240. The stock, it closed at 320. So yeah, maybe something stirred some shorts. Someone's caught with their pants down. They have to cover. Maybe they were long Netflix and now they have a margin call. Who knows? But maybe a playable squeeze here, maybe to 350 tomorrow. So definitely looking at that car. Roku, I did a little post on the watch list. I posted on Twitter too. I don't get how Roku, well, I do get, because it's the entire sector in the streaming space got destroyed yesterday after Netflix reported a decline in subscribers. It wasn't really it was a forced decline. 700,000 subscribers were removed from Russia. So technically it was a 500,000 add, but 600,000 subscribers were lost in North America. So that's definitely a concern. But then you take a look, and it's a platform, right? So if you're a streaming company, you're Paramount, Peacock, HBO Max, Hulu, Amazon Prime, list goes on and on. Netflix. Um, you're on Roku, and Roku, it's a targeted audience. So if you have the Roku platform as a consumer, that means that you're streaming, right? You're streaming those providers through Roku, and Roku has ads. So what better targeted audience for a company like Netflix than the Roku platform? So I just don't get how. Well, I mean, I do get it, but to me, I think there's an opportunity, and they're going to report earnings a week from today. The stock has got destroyed. And take a look at the last quarter, their margins went down, I think it was to 43%. A couple of quarters before that, it was up at 59%. So that's a concern. But I think their mix of platform monetization revenue, which is high margin, versus the actual platforms they were selling, that kind of skewed things. There's logistical supply chain issues, I think, that people are citing. Though I don't get with Roku, it's almost at some point they're not going to be selling the hardware, right? It's going to be embedded in the TVs. It's just going to be an app on the iPad, whatever it is. So I never got it as the hardware store, and I think people always got misconstrued with Roku, thinking it's just a hardware provider. Hardware. A company that just sells hardware, as opposed to a company that has a massive user base that's growing leaps and bounds every quarter, that they monetize via average ads and other means. And I think their average revenue per user is up to like $40. Back when I used to follow Roku, it was like $18 average revenue per user. So not only their user base growing, their average revenue per user is going up, and it's the high margin mix, which is where they, the platform monetization, the advertising. So just a great story. I still have some freebie 125s. I was looking at the Mays, maybe 160. I might look at the 160 strikes as kind of a speculative play into their earnings next week. Definitely not the environment for names like Roku, right? The high growth names have been destroyed, as analysts would say, multiple compressions with the rising rates. The rising rate environment's not good for some of these companies. But Roku has $2 billion in cash, minimal debt, $16 billion company. I look at it now, and I haven't looked at it like this in quite some time with a bullish mindset, but I think I have some conviction here that I think Roku is going to go at least back to 150 in the coming months. So I'm probably going to look to place some calls for that possible outcome. So that's Roku. Intuitive Surgical reports after the close today. Still have a couple calls left for the 300 weekly strikes. High risk, high reward, because if Intuitive Surgical, which is already up, $25 over the last 2 days, if they post a abysmal quarter, there's some concerns around guidance, the procedural growth, what have you. The stock may dip back under $300, and then the last of my calls, which are up quite a bit, are going to be decimated. So that's the risk involved. But I think even if the company's like an inline quarter, maybe a little rosy on the procedural guidance, I think goes to 320, and then I'm looking at a nice 10-bagger. So I'll probably hold those. The other thought process is that maybe I'll close the last of the 300s and do some out-of-money strikes for next week, some 340s, 330s. So that's a possibility as well. So I'll play it by, if it holds 302 or so today, maybe I'll just hold on and then look to, hold on to the seat of my pants into earnings after the close. And then last is IBM. IBM pretty much held up the Dow. Dow was up 0.8% yesterday, despite the market weakness. Again, locked a lot of my calls in already. Still have some of the May 140s. If you take a look at IBM, and if people start looking at IBM as this was the turning point, then maybe it's 145, 150 in the coming weeks and months. So that's kind of the thought process there, holding on to the strikes. If it gets down to 136, I'll probably salvage the Mays. I'll sell the rest. I'll still be up nicely, and then I'll revisit at some point, because IBM, it's not the fastest mover, so maybe it consolidates here, and it just all it does is just destroy premiums before the next leg. So I'll probably just hold on to those for now, but 136 probably the stop point. I think that's it. Pools at 446. All right, we got 3 minutes to the open. Let's have a great day, folks. Rock and roll.